What if I told you something just broke in the gold-silver ratio, and it shouldn't have happened like this? Because on the surface, everything looks normal, but underneath, something doesn't add up. The gold-silver ratio just dropped below 60, a level that usually signals silver strength. But this move feels different, faster than expected, sharper than usual, almost like something pushed it there. Now normally, when this ratio falls, it means silver is outperforming gold. That's the standard explanation. That's what most traders believe. But right now, that explanation feels incomplete, because when you zoom out, the silver market isn't just moving, it's reacting to pressure, to supply signals, and possibly something building quietly behind the scenes. And this is where things start to get interesting, because this isn't just about price movement anymore. It's about what's driving that movement and why it doesn't look natural. At the same time, silver premium levels are still elevated, even after recent spikes above 20%. That's not something you usually see in a stable market environment, which raises a bigger question. If silver is truly moving naturally, why are these pressure signals still there, and why does the move feel like it's being forced forward? Because markets don't usually behave like this without a reason, and when they do, it often means something deeper is happening that most people haven't noticed yet. So what exactly is driving this move? Is this a normal shift, or the beginning of something bigger inside the silver market that hasn't fully played out yet? In the next few minutes, I'll break down exactly what's happening, why this move looks forced, and what the data is quietly telling us about where silver could go next. And more importantly, whether this is just a temporary move or a signal that something inside the market has already started to shift in a much bigger way. Because once you understand what's really behind this, the entire picture changes, and what looks normal right now might not be normal at all. Before we go deeper, if you don't want to miss what's happening in gold and silver, you can subscribe. I break down these market shifts regularly as they unfold. And I'm curious, do you think this move in the gold-silver ratio is actually bullish, or something else is happening underneath? Let me know in the comments. All right, now here's where it gets interesting. So on the surface, this looks simple. The gold-silver ratio is falling, which usually means silver is gaining strength. That's the standard interpretation most traders immediately jump to. And that's exactly where most people stop thinking. They see the move, label it bullish, and move on. But markets don't always reveal the full story that easily. Because if this was a clean, natural move, everything would align. Price, demand, and behavior would all point in the same direction. But right now, that alignment isn't fully there. And when markets lose that alignment, it usually means something underneath is off. Not broken yet, but shifting, quietly and often unnoticed until it becomes obvious. Here's the part most people miss. A falling ratio doesn't always mean strength. Sometimes it means pressure. Pressure building from one side of the market. And that's where this starts to look different. Because silver isn't just moving higher. It's moving faster than expected. Faster than what normal demand alone would explain. Which raises a critical question. If this isn't just natural demand, then what's pushing it? What's creating this kind of speed inside the silver market right now? Because markets don't accelerate like this without a trigger. There's always something underneath driving that momentum. And right now, that trigger isn't obvious on the surface. This is where things start to shift from simple to complex. Because what looks like strength might actually be a reaction to something building behind the scenes. And when markets start reacting instead of moving naturally, that's when patterns begin to break. Subtle at first, then more visible over time. So instead of asking, why is silver going up? The better question is, what is forcing it to move this way right now? Because once you flip that perspective, the entire situation changes. And what looked bullish at first starts to feel a lot less comfortable. Now here's where it gets even more interesting, because this isn't just about the ratio anymore. There are other signals starting to appear. And they don't fully match the story. Signals like silver premium levels, supply pressure, and physical demand behavior, all moving in ways that suggest something deeper is happening. And when these signals start diverging from price, that's when experienced traders pay attention, because that's usually where the real story begins. Because price tells you what is happening, but these signals tell you why it's happening. And right now, those two aren't perfectly aligned. Which brings us back to the original question. Is this really a natural breakout? Or something being pushed forward by pressure inside the system? Because if it's pressure, then this move isn't just a signal, it's a warning, a sign that something underneath hasn't fully resolved yet. And that's exactly where things start to change. Because when we look at the data behind this move, the story becomes very different. So let's break this down. If this move isn't fully natural, then what's actually driving it? Because something is clearly pushing silver faster than expected right now. And this is where the idea of a forced move starts to come in. Not manipulated, but pressured. Pressured by imbalance, building inside the system over time. Because markets don't move like this without a trigger. And when that trigger comes from pressure, it doesn't behave smoothly, it behaves aggressively. That's exactly what we're seeing here. The speed of this move doesn't match a slow buildup of demand. It looks like something accelerated it. And when acceleration appears without warning, it usually means pressure was already there, building quietly before the move became visible. Now think about this. If silver was simply rising because of demand, the move would be steadier. But this isn't steady, it's reactive. And reactive moves are important because they tell you something is being adjusted quickly, not naturally forming over time. This is where the word forced starts to make more sense. Not forced by one event, but by conditions building underneath the market. Conditions like supply constraints, physical demand shifts, and pressure from positioning, all slowly building before finally pushing price forward. And when those conditions align, the market doesn't move gradually. It moves suddenly. That's when things start to look abnormal. Now here's the key part. A forced move doesn't always mean something is wrong. It means something is out of balance. An imbalance is what drives the biggest moves in markets. Not stability, but pressure trying to correct itself. Which means this move could be more than just a short-term reaction. It could be the early stage of something larger unfolding, but at the same time, forced moves don't stay stable. They either accelerate or pause sharply. And that's where things become unpredictable, because once pressure is visible, it doesn't disappear. It either spreads or gets delayed. So the real question isn't whether this move is real. The question is how far that pressure can push before something reacts. Because every forced move eventually reaches a point where the system has to respond. And that response can change everything. And when we look at the next signal, the one most people ignore, that's where this starts to get even more interesting. So now let's look at the signal most people ignore. Because while everyone is watching price, something else has been quietly moving underneath the surface. Silver premium, the difference between physical prices and futures markets. And right now, that gap is still elevated above normal levels. At the moment, premium is sitting above 13%. That alone isn't extreme, but it's not normal either, especially when the market is supposed to be stable. But here's where it changes. Just weeks ago, that same premium spiked above 20%, in some cases even higher. And that kind of move doesn't happen without pressure. Because premiums don't rise randomly. They rise when physical demand starts exceeding available supply. When something in the system can't keep up. And that's exactly what makes this important. Because while price suggests strength, premium suggests pressure. Two different signals pointing in different directions. Now add another layer, Shanghai, one of the most active physical silver markets. And recently, prices there have been trading at a noticeable premium compared to global markets. That premium gap means something simple. Demand in that region is stronger than supply available locally. And that imbalance starts to ripple outward. Because markets are connected. When one region starts pulling more supply, it creates pressure everywhere else. Slowly at first, then more visibly over time. And this is where things start to connect. The ratio break, the forced move, and now elevated premiums. These aren't separate signals. They're part of the same story. A market under pressure doesn't always show it directly in price. Sometimes it shows up in these smaller signals first, before the larger move happens. And that's what makes this moment important, because we're not just looking at price action anymore. We're looking at behavior inside the system, behavior that suggests something hasn't fully balanced yet. And when imbalance stays in place, it tends to push the market further than expected. So if pressure is still there and hasn't fully resolved, the real question is what happens next when it starts to move again? So what happens next? Now that we've seen the ratio break, the forced move, and the premium signals, there are only two realistic paths from here. In the first scenario, this pressure continues building. And when pressure builds inside a market like this, it doesn't move slowly. It accelerates. That's when silver starts to outperform. Not gradually, but sharply. Because once imbalance pushes through resistance, price tends to move faster than expected. And that's a topic we'll break down in an upcoming video. Because when silver outperform phases begin, they follow very specific patterns most people don't recognize early. In the second scenario, the market slows down, volatility cools, and price consolidates for a while. But that doesn't mean the pressure disappears. It simply means the system is absorbing that pressure, delaying the move, not canceling it, because imbalances like this don't resolve quietly once they reach this stage. At the same time, global factors can amplify this. Things like geopolitical tension, energy routes like the Strait of Hormuz, and broader uncertainty, because when uncertainty increases, demand for physical assets often rises, and that adds even more pressure to a system that is already out of balance. So now you have a situation where multiple signals are aligning, ratio breaking, premiums elevated, and pressure still present underneath the surface. And when these signals align like this, the outcome is rarely small. It tends to move further and faster than most people expect. If this pressure spreads continuous, especially this week in trading, this could change very quickly. So the real question is, are we early in this move or already late? Let me know what you think. And if you want real analysis like this, subscribe.